Hello friends, let's understand the operational risk in business. So what are the different types of operational risk? What are the sources from which operational risk arise and how these risks can be mitigated or prevented? Operating risks fundamentally arise from the business operations, human behavior, technology, process and few other factors, mainly internal factors, and some of them are external as well. Some of these factors are within the control of the organization to a very large extent. For example, the employee behavior, the processes to be followed, the technology deployed, etc. But some of them are outside of the control of the organization. For example, the natural calamities which might impact your business. So it is possible to mitigate this risk to a very large extent as far as the internal factors are concerned. And of course, you can take some measures like insuring your property when it comes to the external factors like flood and earthquake. It is difficult to estimate and plan for the operational risk in business. For example, you wouldn't know, for example, if an employee might conduct a fraud or an earthquake might happen or a robbery might happen in your store. So many of the businesses provide for the operational risk as a certain percentage of their revenue. For example, under Basel III guidelines, banks are required to provide a percentage of their gross income towards their operational risk. Operational risk I'll classify into 5 main categories depending on their sources. Number 1, human. Number 2, management. Number 3, process. Number 4, technology. And number 5, natural. Let's look at each of these in detail. Number 1, human. As the name suggests, the operational risk relating to humans arise out of the human behavior. You employ a large number of people. You also have contractors. There may be consultants working with you. There may be outside influences. For example, you have security people who are on contract and so on and so forth. Now, why are the operational risks from human behavior caused? There could be an employee who is being negligent while delivering the service to the customer. For example, a waiter might drop a very hot item on the laps of a customer in a restaurant. There could be a lethargy in the part of the people in the manufacturing environment, or there could be lack of empathy while dealing with the customers. For example, the person might rudely behave with the customer and the customer might get unhappy. There may be low social or emotional IQ which will sort of impact human beings in how they deal with customers and other stakeholders. Or some people may not like the work they are doing, so it will reflect in their behavior and the stakeholders will be unhappy. So all kind of these human related causes can lead to operational risk for business. Some of the examples will be, even let's say after spilling the hot tea on customer's lap, the waiter still continues to behave rudely, then it can escalate into a big problem. If you ignore customer complaints, for example, and then it can lead to escalation. The customers might go to social media, they might talk bad things about you, and you can get into trust issues with the customers. You could have let a bad quality or a defective product go into the market. Of a lot of car companies recalling products just to sort of, if there is a problem with the brake assembly, right? They do it to a very large extent to maintain the trust of the customers. In case there is a robbery in your shop, let's say you're a jeweler shop or you're a retail store, or if there is a fraud, for example, by the employee, right? All these are the examples of a operational risk in business, and all these relate to the human behavior. How you can mitigate this risk? Obviously, for example, against frauds, etc., you can have good security systems in place, the physical security as well as perimeter security. For example, against something like flood, etc., you can have your documents extra stored in a place where the flood, will not easily reach, maybe on the first floor or second floor of any buildings. Or, you can have for example, the mitigation, as a mitigation measure, you can screen your employees when you take them on board, right? A lot of exhaustive screening is done when you take somebody on board in terms of finding out their background, etc. You can train the employees well by using a very well documented process. You can review their performance and mentor them in order to behave well with the customers, etc. And you can reward the good behavior, right? So this will help you mitigate or manage the operational risk arising from human behavior to a very large extent. The second source of the operational risk is obviously the leadership in the company itself, not general staff I'm talking about, because leadership is responsible for long-term success of the business. When I'm saying leadership, I'm talking of executive leadership like the CEO, the managing director, the board of directors, etc. And it is very important that all these people have experience in the line of business that we are talking about, the company's business. They have vision, they can see ahead in the future. They have integrity, which is most important, and they are very ethical in their approach. So any kind of conflict of interest that, for example, the board of directors have in a specific transaction, I think they should disclose. They should exercise independence and also exercise integrity in all their business decisions. Some of the examples that I can give is, for example, we know one of the biggest private sector banks in India, the chairperson has been accused of a fraud in lending to one of the business groups, and the lady in question, I think she is facing those investigations. So this has led to the leadership crisis and bad reputation for the bank. Another example in the similar domain, in the stock market domain, one of the lady chairperson of a large stock exchange was accused of giving preferential treatment to some of the brokers in allotment of the infrastructure facilities of the exchange. So these are at the leadership level, and these cause the operational risk for the business. How do you mitigate against this kind of operational risk in business? You can have strong corporate governance, for example, the independent board of directors who are monitoring these kind of decisions. You can have active shareholders or shareholder groups who are questioning these kind of decisions, and the board should have very good selection committees which are involved and which take into consideration these kind of possible aspects while selecting the important people in the organization, for example, the managing director or a chairperson. The third source of the operational risk is the process. It is very key, especially for the large organizations, for the sake of scalability, that they standardize the processes, they document the processes, and train their people on following the processes very, very well. And processes are a key to standardize, to maintain the quality, to scale, have some kind of a predictability of outcome, and they are also required to be documented for maybe if you want to get, let's say, an ISO certification, right? So processes are very important in large businesses. The tools that are deployed, for example, in the implementation of the process, are conducting regular trainings for the employees, doing the exhaustive documentation of the processes, having, let's say, process flow charts, checklists, reviewing the process adherence, and having the process audits. So these tools will help you reduce the process related operational risk to a very large extent. What kind of fallouts can be there if the process is not followed, or the process is followed without making right kind of exceptions? Because you can't blindly follow the process. If something occurs, you should have the right kind of authority delegated to people to make an exception and make sure that, let's say, the customers are happy. So that mitigation is done mainly through having technology tools. For example, how do you force a process? You imbibe the process in a technology, for example, a workflow and an approval and the authorities, right? So it will make sure that the people are following the process, let's say in the claiming of the reimbursement expenses. And also you should delegate right kind of authority to people at the respective levels to make sure that if the process goes wrong, then they are able to still manage the fallout from the processes. The fourth important source of operational risk is basically technology. Today, as we know, almost all the businesses are heavily dependent on technology. Even the small business, for example, a pharmaceutical small retail outlet, if you go there, you know that when he generates the bill, his inventory is getting automatically updated, and also if the stock is low, then the company's distributor gets automatically informed that this particular medicine has to be refilled immediately. So there is so much of dependence on the technology for all the businesses today. So, and more so if you are in a technology driven business, for example, you are in FinTech, or you are in RegTech, or you are, for example, any of these platforms like Oyo, or you are, let's say, Swiggy or something like that. So technology usage is there across all the functions of businesses today, in, let's say, engineering, in product design, in manufacturing, extended manufacturing, contractor management, quality, logistics, billing, collection, right? Across the entire business value chain, the technology has become extremely important, which leads to a lot of risk. For example, the risk of obsolescence of the technology. The technology that you are using today is not keeping pace with the requirements of the business. So you need to sort of upgrade the technology or move into some other technology. The systems not being available. For example, you have a manufacturing process, and on the assembly line, for example, the certain parts need to be scanned for you to produce, let's say, a camera or a laptop. Now, for example, that scanning machine is not working, right? How will you go ahead and produce? The system itself is not available. For example, the bank system is not accessible by the customers. The system is not performing at the peak. The throughput is not good enough, or there is security related issue, like for example, there is a hacking, there is a cyber attack, or for example, there is this DNS attack, denial of service attack on your portal, for example, right? Or the database crashes. So many of these issues are inherent in the usage of technology, and we need to manage it well by using, for example, things like upgrading the technology whenever required, using cloud where it is required. For example, if the cloud is providing good security, it is highly scalable, flexible, right? So we might deploy cloud for certain solutions. You should have business continuity plan to work while the technology is not available, or a disaster recovery plan to recover, for example, the database and the transactions. And also you should conduct regular security audits. So taking care of technology risk like this will help you reduce the operational risk to a very large extent. The fifth source of operational risk is the natural causes. For example, floods, right? So floods might damage your business if stocks are not insured. For example, you will suffer losses. Let's say you're a bank and you have stored the customers' documents, maybe collaterals for mortgages in your branch, and the branch is getting flooded, right? So your customers' documents will get lost, and you will have to replace those documents and do all the communication with the customer. If the drought is there and you are depending on a particular crop for your manufacturing, for example, you're a bread manufacturer dependent on, let's say, wheat availability, that will impact your business. Earthquakes can impact the business to a very large extent, right? So because it's a very big natural calamity, and there's hardly anything you can do against that except maybe have a good quality construction as much as possible. Weather extremes can impact the business, right? So you can have unseasonally rains, for example, which can lead to crop losses, or something to do with your manufacturing process. Endemics, epidemics, like we saw COVID-19, for example, which is a natural, we can call it a natural cause. So so these are, many of these natural causes are out of the control of business. You can't do much about it, right? Individual business has to take it the way it comes, but obviously you can plan to a certain extent. For example, to reduce the business loss, of course there's a large degree of unpredictability in that. For example, the COVID-19 was called as a black swan event, that which you cannot easily forecast, and therefore the business disruption is bound to be there. Some of the examples I can give are, for example, few years back there was a large flood in the Southeast Asia, for example, Philippines, Indonesia and other places, and these are the places where large computer component manufacturing gets done, right? So hard disk and everything. So the entire worldwide supply chain of computers was impacted. The prices went up quite a lot, and there was a delay in the manufacturing during COVID-19 also, because a lot of these electronic goods, the components are manufactured in China, for example, right? So the prices increased, and the delivery time frame for these kind of goods increased quite a lot. How do you mitigate against this kind of risk? Is, of course, you diversify your supply sources as much as possible. For example, don't depend just on China or Southeast Asia. If you can set up some kind of manufacturing facilities domestically, right, that will be a good thing to diversify. You can of course take the insurance. If some of these are insurable risks, they are outside the the coverage of act of God, then you can rely upon insurance. For example, to protect against the weather, you can plant trees to a very large extent, but obviously a single business has a limitation in terms of how much they can do. And also maybe for protecting against the earthquake, you can have a very good high quality construction. So to a certain extent you can try to manage these risks, but obviously the natural disasters are something which you cannot manage beyond a limit. So understanding these kind of operational risks will help you assess their impact, plan their mitigation to the extent possible, and of course this understanding of risk will help you in your career, because then if you are looking at a risk management as a serious career, then you need to understand operational risk. I hope you found this video useful and interesting. If yes, please do like this video, share with your friends, and also subscribe to my channel. Thank you very much. Cheers.